us to the end of the housekeeping announcements. So without further ado, I'd like to introduce you to our presenter, Jamie Fatheree. Jamie's worked at the credit union for over 23 years and has spent the last 10 years or so in the financial wellness department. She's designated as a credit union financial counselor and says that the favorite part of her job is hearing from members who are excited to share that they've met a goal that she and that member have been working on. That's when she knows she's made an impact in their lives. And speaking of impacting lives, she's definitely done that in her years in financial wellness, as she's booked over 1,000 appointments over the years and helped countless members take control of their financial future. Lastly, Jamie's pretty experienced with the stress of managing a monthly budget. Has not only used some of these spending plan strategies she's going to go over today in her own life, but has also used her personal experience to help hundreds of our members do the same. So needless to say, Jamie knows what she's talking about. And Jamie, I'll turn it over to you. I'll check in with you here in a couple slides, but for now, the floor is yours.
Thank you so much, Jack. And thank you all for attending today. I'm always excited to share this information with everybody. I can tell you from personal experience, I wasn't always great with handling money and found myself in debt more than once. And each time I had to come back to the strategies that I'll be sharing with you today to pay off that debt and get myself back in a place of financial health. So I look forward to sharing this information with you so that hopefully you can use that to put yourself in a better position as well. And of course, we're highlighting that this series is for first timers. So those who really have never done a spending plan before, I hope that this will be clear and will help you with developing that habit and keeping up with it. So let's go over a little bit about what we're going to be talking about today. And we'll be going over kind of what is a spending plan? What does that mean exactly? Why do you need one? And what are some spending plan myths? Maybe what have you heard about it that has kept you from either learning about it or following one yourself? We'll go over how to get started. We'll talk about how to make it stick. So once you've got it going, how to really develop that healthy habit. And then we'll talk about, of course, how the credit union can help and what tools and resources are available for you. We're going to jump in with a poll, and I will let Jack take over for that.
Awesome. Thanks, Jamie. We just want to get a quick pulse of the room before we kick things off, help Jamie tailor some of her topics to the folks that are here today. What are your financial goals? Keep in mind on this question, you can choose more than one answer. We've got A, maybe you want to save more money. B, maybe you have some debt that you'd like to focus on paying off. C, are you looking to invest a little bit more? Or D, maybe you have a house or a car that you in mind that you want to save towards and buy. And then maybe E, you're hoping to have a little bit of extra spending money to do what you want. Jamie, do you have any goals right now?
Yeah, so right now, my goal this year, my focus has been on investing. So really kind of paring down. I've got the debt paid off. Now what to do with that extra money before I just spend it. And that is really kind of investing for the future and getting ready for retirement.
Good for you. I know a lot of people are probably in that same boat. I'm all of them probably in some form or fashion. Of course, I want a new car. Of course, I want to invest. Of course, we want to pay off all debt. Would love to save more money. But let's see what some of our respondents said today. And going through, it looks like pretty even across the board. Hopefully, all of our attendees can see what their colleagues and fellow attendees said. Looks like about a third said save more money, almost 40% pay off debt, another third are right with you in investing, and then 28% would like to buy a house or a car or have a little bit more spending money. So kind of a broad spectrum of folks as far as their financial goals. And I know you're going to tell them all the great ways that setting up a spending plan can help them achieve those goals, right?
Absolutely. Yeah. I mean, no matter what your goal is, financially speaking, a spending plan is what's going to help you get there. It's kind of the roadmap to getting you towards that goal. So thank you for sharing those with us. And let's show you that roadmap. So first of all, what is a spending plan? A spending plan is a plan for how you want to spend your money. It gives you permission to spend on things that are important to you and helps you cut back on the things that aren't. It's basically the foundation of any financial goal. So like I mentioned previously, I kind of liken it to a roadmap, right? You've got your beginning point and your ending point. Your ending point is the goal that you've selected. The spending plan is what's going to help you get there. It allows you to give yourself, as I said, permission to spend on the things that are really important to you, kind of determine what your values are, set aside money for those values, and then, kind of work from there. Some people say, well, hey, doesn't that kind of sound like a budget? Well, yeah, of course it does. It is essentially a budget, but I prefer the term spending plan. I like to spend money. I think you guys probably do too. Who doesn't? And we do want to spend some of the money that we make, right? We work hard and we put a lot of time and effort into our jobs, and we want to be able to reap some rewards from that, not just save it all, but having that spending plan kind of gives us the permission to kind of focus on some of those wants so that we can enjoy what we're making, but also make sure that we're working towards the goals that we have as well. So we're going to jump right into poll question number 2. Jack, take it away.
Yeah, I promise y'all there's only like this one and one other one. So this isn't going to be all polls. We're actually going to give you some information here. But again, just getting a pulse of the room. How many of you have a spending plan? Maybe A, you've never created a spending plan, and that's why you're here. Talking about the first time theme that we have this quarter. Maybe that's why you're here. Maybe you have one, but you don't really follow it. So you want to go back to the beginning and as if it were your first time creating that spending plan. Or maybe you have one and you use it every month, and you're here today just to learn how you can fine tune it. And again, maybe approach it through the lens of, this is my first time to redo it. There's a first time for everything. So Jamie, I'll be honest, I have one, but I don't always follow it. I help set it up and create those positive habits. Always worth reviewing and going back. Where do you stand on having a spending plan?
Yeah, so I have one and I actually use it every month. I am naturally a spender. If it's not designated to go someplace, my money's going to disappear. So if I've kind of gone through periods of time where I get off track and I don't use it, and I always end up, spending money that I shouldn't have, and have to get myself back on track. So I've kind of learned over the years that I have to stick to it and do it every month if I want to meet my goals.
Yep, I hear you. Well, it looks like a number of people agree with you. 27% said they have one, they use it every month. So maybe you're here to learn how you can fine tune it, make it better. What other resources are out there? It looks like there's about 20% that are like me, they have one and they don't follow it. Perhaps, Jamie, you're going to completely invigorate us and make us want to follow it again. And then another third of the respondents said they've never created a spending plan. Let me tell you, you're in the right place. Jamie, I know we're about to get into the meat and potatoes now. So everyone that's joining us, pay attention. There's some good stuff coming.
Again, thank you for sharing those answers. So we want to help you if you've never created one before, kind of show you how easy it can be. And for those of you who have had one but maybe don't use it, this may show you why it's important to stay on track, especially if you find that you're not meeting the financial goals that you've set for yourself. I always bring it back to a spending plan. If you've ever visited with one of our counselors, or even if you've listened to me in a previous webinar, you've probably heard me say that a spending plan is, the step one, that is the baby step to get you to where you need to be. And for those of you that do already have one and use it every month, congratulations. I'm proud of you. And let's see how we might be able to help you either perfect it or just kind of confirm that you're doing what you should be doing. Let's talk about why you need a spending plan. So these are for those of you who, have never created one, or maybe you have one, but you don't really use it. The spending plan is going to help you gain control of your money. Like I mentioned, I'm a spender. If I'm not really plotting out and planning for how I want to spend things, it just tends to disappear. When I'm working my spending plan and I'm actually allotting things for, vacations or extra shopping, school clothes shopping is kind of the big thing right now, right? And supplies, they're expensive. I have to plan for that. So it helps me feel much more in control of where my money's going, and I can keep track of it. I don't get to the end of the month and kind of wonder, why do I not have enough money to make it to the next pay period? Or, where did everything go? A spending plan also helps you save money, right? So if you know where your money's going, then you have the control in order to say, you know what, I'm going to put X amount of dollars into savings every pay period or every month. And you can take care of that right away. And then you know exactly what you have left to work with for the other expenses that you have for the month. A spending plan can help you pay off and avoid debt. So again, if you want to do a debt payoff plan, you've got to know how much money you can afford to put towards those debt payments, right? Um, so, if you're spending all of the money that you make for the month and you're only able to make minimum payments on your debt, you're not necessarily going to get anywhere very quickly. Um, but if you can, take a look at what you're spending your money on, know that you can cut back in certain areas, and you have, maybe it's $50 a pay period left over that you can put towards debt payments, that's going to help you, really focus on that debt payoff plan. The spending plan is going to help you plan for future expenses. So, like I said, I just mentioned school clothes, and supplies. These are not, they're not surprises, right? We know these are coming up. If you have kids, you know that every year in probably August, you're having to buy those school supplies, if not before. Having your spending plan helps you build that into the month that you need to do that. The holidays are just around the corner. They're not a surprise to anybody, right? They might seem like they come up on us a little faster than we'd like, but they're not a surprise. We know that the holidays happen the same time every year. Having the spending plan is going to help you plan for that and say, okay, maybe starting in September or maybe in October, I'm going to start putting so much money aside into a savings account so that I can start purchasing gifts or decorations or extra food for Thanksgiving or whatever it is that you celebrate. You can start to plan for that ahead of time. So that way you don't get to that month or that holiday and say, oh man, what am I going to do? So it does help you plan for that. As we've talked about, a spending plan helps you reach your financial goals. You guys have mentioned some of those goals, whether it be paying off debt or saving for retirement, maybe purchasing a new home or a car. The spending plan, again, helps you really align that goal with what your other regular expenses are and will help you get there. And finally, I think a spending plan really helps to give you peace of mind. Um, when you're stressed out about money, you don't know where the money is going, you're stretching it paycheck to paycheck. It's stressful. We don't want to live that way. It makes more sense when we have control over where the money's going and where we want that it's going where we want it to go. It just brings a whole new level of peace to the household, to yourself, and helps you, just again, financial wellness, right? That's the goal, and that's what we want to help you achieve. Let's talk about some of the myths of spending plans. These are things that I actually hear from members when I first start working with them on creating a spending plan. The number one complaint is that it's too complicated. I've never done it because it's just too complicated. I've looked at different spreadsheets or I've looked at different apps and I just don't get it. But the thing is, it doesn't have to be complicated. A spending plan is literally just figuring out how much money is coming in and how much money is going out, right? And then you're aligning your priorities with that. The thing that I tell people to do is make a list. Make a list of all of the things that you have to pay, right? That's going to be your mortgage or your rent payment, your utilities, groceries, maybe your car payment, the things that you absolutely have to pay every month. Those are going to be your top priority. And then you're going to make another list of your wants. And then I would say rank those wants from most important to least important. And you start, building that in. You have your income amount at the top and you just start subtracting until you get to zero. Hopefully savings is up there at one of the top priorities. It is important to build that in. So it does not have to be complicated. I'm going to show you a couple of easy things that you can do to kind of get started with that. The second myth that people tell me is, I don't have time to mess with it. It takes too much time. I'm busy. I have kids. I'm working. Who has time to sit down and pay attention to this? And my answer is usually, you know what? You don't have time not to. By not doing it, you're really costing yourself time and resources. And it doesn't have to take a lot of time. I think sometimes the very first time that you sit down to put it together, that's what's going to take the most time, because then you've really got to kind of go through all of your bills and your expenses and figure out how much you want to allot to certain categories. But once you do that, once you get that first one completed, it's really, I would say, 5 minutes, right? Whenever I get paid is when I pull up my spending plan. So it's my payday, pull up my spending plan, figure out what bills need to be paid between that payday and the day before the next, pay all of those bills that day. I'm not waiting for due dates. I'm just going to knock them out right then. And then I can see exactly how much money I have left over, and I can put it into the compartments that I want it to go. Basically, I'm setting aside a certain amount for groceries, a certain amount for gas, a certain amount that goes into my vacation fund, my holiday fund, things like that. It does not have to be very time consuming at all. Now, the third myth is that it's boring. Okay. That's maybe not a myth if you're not really into numbers, crunching numbers. I'm really honestly not, even given the job that I do. It's not super exciting, right? But what is exciting is when you start to see yourself realizing those goals that you set for yourself. The first time you pay off a credit card, that first one on your list, that's exciting. When you finally have enough for your down payment on that car or house, that's exciting. And this is what's going to help you get there. So the spending plan itself might be a little boring, but the effects of it definitely are not. So let's talk about how to get started. Especially if you're doing this for the first time, what you want to do is gather all of your bills and statements. So your credit card bills, your bank statements, I would say at least 2 to 3 months of your statements. These statements are what's going to help you figure out those variable expenses. How much are you spending on groceries? How much are you spending on clothes shopping every month? How much are you spending on dining out? Those are kind of the ones that people are most surprised about. So once you figure that out, you're going to make a list of all of your expenses. Like I mentioned, use your statements to figure out how much you're spending on those variables. Add that up. I say 3 months because I want you to get kind of an average, right? Some months you're spending more than others, but give yourself an average. What are you spending on things like dining out and groceries? Determine your needs and wants. I told you about making that list of kind of the needs and the wants and prioritizing them. And don't forget to make savings a priority. Whenever you see budget worksheets, if you notice, savings is almost always at the top. And there's a reason for that. It should be the number one priority. Okay. Record all sources of income. So that is not only your paycheck that you get every month or every 2 weeks or every week or however you get paid. You want to record your income, but that could also be things like bonuses, profit sharing, tax returns. Those things don't necessarily come in every month, but for the month that you actually receive them, you want to make sure you include that income. Those are going to be the times that you may be able to put a little more towards debt payments, if that's a thing, or add up your down payment for your house or your car, if you have a savings set aside for that. So record all sources of income that's coming in. If you have rent or if you do any type of side work, anything like that, we want that recorded. Then you want to start subtracting expenses from the income until you get to zero. Give every dollar a purpose. Okay. At the end, people think they're winning when they have a surplus of money at the end. And I mean, you are, that's great. We want you to have a surplus, but give that surplus a purpose. Don't just leave it sitting in the checking account or wherever else because it will disappear. You want to say if you have $100 left over after you finish that spending plan, then assign it somewhere, whether that be to debt, to emergency savings, to that down payment account, whatever it is, make sure that you give it a purpose. That's really important. Let's look at how to break down how much you should be allotting for each category. I get this question a lot because people are just like, well, how do I know how much I should be spending on transportation or how much should I be spending, for my rent or my housing payment? This little pie chart here is going to give you an idea. Now, keep in mind that this is not a hard and fast rule. Okay. This is just a guideline. This is about, the average, what you should be spending in each category. But if you're spending a little more in one area, it means that you just may have to make up for it a little bit in another area. So the first one here is housing. That's going to account for about 35% of your income. Housing should include your rent or mortgage payment, your utilities, insurance, and taxes. So at 35% of your income, if you start looking at, if your mortgage is really more like, 40% of your income, something like that, then you're going to have to look at which of these other categories you may have to cut from in order to make up that difference. Or you can kind of determine, is there any way you can reduce the expenses that you're paying in housing? So could you, look at different utilities? If you're renting, could you move to a less expensive apartment, something like that? Um, the next category is going to be transportation at 15%. That's going to include the car payment, insurance, gas, and maintenance. You can just kind of total up what you think you're paying in those categories. If that equals more than 15% of your income, you may need to make some adjustments. Debt payments. Ideally, this would be at zero, right? And then we could have a lot more for the other fun categories. But if you are making debt payments, if you still have debt payments, try not to make those more than 15% of your income. We really don't want it to take up much more than that, because then you're really cutting into the fun part, right? Which is the life expenses. And that's going to be your food, your clothing, vacations, other little miscellaneous things that we enjoy in life. And that should be about 25% of your income, maybe more if you don't have the debt payments. And then, of course, we have the final category, which is really, I think, the most important, is savings, and that should be at least 10%. So again, if you don't have the debt payments, maybe a portion of this goes to savings to bump that up, or make those adjustments. If you're not saving at least 10%, maybe take a look at those other categories and see where you can adjust to bring your savings up to 10%. Now that can include retirement savings. It doesn't have to be just money that's going into your regular savings account, but ideally, as long as it's 10% spread out between the different types of savings, I think you're doing pretty good.
And Jamie, I'm going to chime in here. If you'll go back to the last slide.
Absolutely.
So folks, I just wanted to let you know, we did have built in here some time for some questions. So I know we've covered about half the material. So if you have something, go ahead and utilize the Q&A feature right now. And I know, Jamie, a lot of times we do have questions about the expenses breakdown, how people should build a spending plan for the first time, keeping these percentages in mind. And I just wanted to get your thoughts on, these are more recommendations, right? Or they, kind of tell us a little bit about how these numbers are presented.
So if, I'm not sure I fully understand the question, but if you're saying, how do we determine these numbers? Is that what you're asking? Or
Yeah, that, and some of the nuances, like maybe housing could be 40%, debt versus housing, how do you differentiate that sort of thing. I guess the point I'm trying to make, and I want you to add some meat to it, is this isn't necessarily a hard, fast rule for everybody, and how things can kind of take different shapes if you're talking about the slices of the pie.
Mhm. Absolutely. So yeah, like I mentioned, this is not a hard and fast rule. Everybody's budget and priorities are going to be different, right? Your priority may be that you live in your van and you're happy with that, and that van is paid off in full. So you don't have really the housing expense. That's fine, and that's what you enjoy. And that's, obviously that's an extreme example, but it's all about priorities. So it could be that you want to have the bigger house, and it's going to come up with a bigger mortgage payment, and it may be that 40% or 45% even. So what you just have to do is make the adjustments in other areas in order to make that all fit, right? So
Yeah.
it could be that your car is paid off, and so you don't really need to designate 15% to transportation. It may be more like 5%, just to cover gas and things like that. And that gives you more money to put towards savings or the fun parts, or even debt if you're trying to pay off debt.
Excellent. And even within each of these chunks, you can get super in the details, right? So, for example, transportation, maybe you want to take that 15% recommendation and say 5% is for gas, 5% is for maintenance, 5% is for insurance. You can get as granular as you want, but these are just general recommendations, right, Jamie?
Right, exactly. We're talking about doing this for the first time, so we want to keep it
Yeah.
as simple as possible,
Level as
and
possible. Yeah.
not get too into the weeds here. But I think if we kind of understand that when we're talking about transportation, that's including insurance, gas, and maintenance, you can add up all of those things and say, okay, is this equal to, greater than, or less than 15% of my income for that month? Without having to necessarily assign specific percentages to each of those things. Certainly there's people who are great with numbers and they can work those Excel spreadsheets and get the graphs going and everything and really narrow it down. And I think that's fantastic. That's definitely not me, but it's fantastic. But just for the sake of keeping things very simple, when you're pulling this up for the first time, we don't want to get people into that, it's too complicated, I don't want to do it kind of a mentality.
Yeah.
So we just want to keep it real basic.
level.
And this is, the percentage, again, not hard and fast, nothing saying that you have to spend 35% or that you're doing it wrong if you're spending more or less than 35% on a house. But it gives you a good guideline to kind of figure out, is there too much going to one area? And that's why I don't feel like I have enough in another area.
Makes sense to me. Kind of piggybacking off of this, we do have a couple questions, Jamie. So some of the different percentages we've thrown out are the different goals and actually overall, when you're creating a spending plan, can you revisit the idea of, are we looking at it a per paycheck basis, a monthly basis, an annual basis? Like whenever you're building a spending plan, do you have any recommendations on what kind of time frame as far as the income and the expenditures that you're evaluating should be applied?
So I find that's a great question, and I appreciate whoever asked that. I think for myself especially, and what I have found with the members that I work with, is that it seems to be easiest when you break it down per pay period. When you say, okay, I have X amount of money coming in this paycheck, what am I going to do with it? Now we have an overall picture, and I'll show you a copy of a spreadsheet that we actually use with our members here in just a moment. But we do kind of a monthly estimate. How much do you think you spend per month on these different things? And then here's the breakdown per pay period. And we're going to say, okay, so if you spend, $400 a month on groceries and you get paid twice a month, that's going to be $200 per pay period that you can spend on groceries, and it makes it a lot easier, more manageable, I think, when you break it down that way. So every pay
Yeah,
period, you know that you can cover whatever needs to be covered before the next paycheck.
excellent. So if I'm understanding that right, whenever we're going back to the first steps of creating a spending plan, we want to make sure that we take all of our income and all of our expenses and kind of line them up. And I think you threw out at least 3 months, right? So that kind of gives us the overall picture, and we can take those averages over, say, and you can do 6 months, a year, if you really want to get into that much detail, but that gives you the big picture and the percentages for each of these potential expenses. And then you apply that on a smaller scale, maybe per paycheck, so that, 3 months from now, whenever your insurance installment is due, you've got that set aside, right?
Exactly.
So hopefully that answers the question. And then one other quick question before we move on for sake of time, and by all means, folks, keep them coming. How do you make sure that you're sticking to the monthly spending? I think we're going to cover that, and we use that exact phrase, right?
Yep,
Later on,
exactly. So whoever asked that question, pay attention to the next couple slides. We are
exactly. We literally, if you hear the word sticking, that's your cue to pay attention. So Janesha, a very good question. We're going to give those tips. So stay tuned. Jamie, back to you for the rest of the presentation, and we'll get to some more questions at the end, guys.
Sounds great. Thank you. Great questions. Definitely keep those coming. Okay, so here's a sample of just a really simple spending plan. If you're interested, you can actually get this exact worksheet on ftc.gov. So if anybody's taking notes, ftc.gov, you can actually download the little PDF version of it. This allows you, I think this is kind of like step one when you're setting up your spending plan. And this is kind of okay, these are my monthly expenses. This is what I have coming in. These are the things that I have going out. It allows you to see, are you truly making enough money to cover all of the things that you're spending money on every month, right? So this is just kind of like the basic money in, money out kind of thing. Once you've determined that you are actually bringing in enough money to cover everything, or maybe you're not and you need to make some adjustments, this kind of lets you figure that out. We'll go into the, once you do this, how do you make that stick? As I think you said, Janesha asked, how do you make sure that you're actually sticking to these numbers? I'll show you that example here in just a moment. So here we go, making it stick. So the first thing that I would recommend is that you set up direct deposits. So once you know that you're putting so much money into savings, you say, okay, you know what, all my expenses are covered. I can afford to put $50 a paycheck into savings or whatever that amount is. Set up a direct deposit to do that. One, you won't have to track it on your budget anymore because we're really going to look at your net income for the spending plan purpose. So if you're setting up direct deposits, there's no need to actually track those on your spending plan because it's already done for you. Out of sight, out of mind, it's set up. Direct deposits help you stay on track that way. I mentioned this earlier, pay bills the day you get paid instead of when they're due. That one thing made my life so much simpler. I didn't have to worry about due dates. I didn't have to worry about, oh, did I forget to pay that one? Did I actually pay it? It made it so much easier to make sure that everything was paid when it was supposed to, because it was always paid before it was supposed to. So like I said before, the day you get paid, go ahead and pay anything that is due between that day and the day before the next pay period. That's going to help keep you on track. And it makes it so much easier to know exactly how much money you have left over that pay period for those variable expenses. When possible, pay with cash. I know that we're kind of getting away from cash as a society, right? Everything's going electronic. But when you can, it makes it easier to stay on track. If you're saying, I have $200 this pay period to pay for groceries, go pull $200 out of the ATM, and that's what you take with you to the grocery store. Or maybe you're dividing that up between 2 weeks because you have 2 weeks between your pay periods. So you take $100 to the grocery store. Whatever that is, one that's going to make sure that you stay on track because you can't spend money that you don't have, right? But also, the important thing is that cash has a more, I guess, emotional feel to it. We can kind of see when we're giving cash away, right? We can see, okay, I only have 5 of these $20 bills. If I have to let go of 3 or 4 of them and I have only one left, it's a different feeling than when you just swipe a card. How many times do you go grocery shopping or any kind of shopping and you didn't even really pay attention to what the total was? They just tell you, okay, swipe your card, and you swipe your card, and it's not till later you're looking at the receipt and like, oh wow, I spent $300 at Sam's, or wherever it is. Not hard to do. We just don't have the same emotional connection to transactions when we're swiping a card. It doesn't feel real. So when you pay with cash, it feels real, and that's going to help you stay on target. Next, I recommend, breaking it down. This works with the pay periods. Like, so we have a monthly kind of estimate of what we're putting out every month, but we're going to break it down by pay periods and maybe even weekly for those variable expenses like dining out and groceries and gas and the things that we can't necessarily say for sure what we spend every month, but we have at least a goal for what we want to spend every month. Break it down into those weekly or biweekly amounts. Involve your family. This is a tough one, right? If you're married, definitely you and your spouse should be sitting down and doing a budget together. Both of you should be on the same page about where money is going. We know that money is one of the major causes of divorce. And when you can get on the same page as your spouse or your partner on finances, it's going to alleviate a lot of the stresses within your marriage. I've seen it myself. I've counseled couples who are on the brink of divorce, and just by bringing them onto the same page financially, they were able to heal some other things. Now, I'm not a marriage counselor. I don't claim to be. I'm not, licensed in that or anything else, but it's just, really speaks to the power of that financial piece and how that brings peace to the household. So involve your family. Also, if you have children, involve them. They're going to be learning from you. They're watching what you do. And so, you don't have to pull them into the weeds with you, especially if things are really stressful, but you can kind of say, have those little conversations of like, we only have so much money for groceries, so I cannot get you those Pokemon cards that are, teasing them at the checkout line or whatever it is. That was always the thing with my kids. It's important to have those conversations with them. let them help you go grocery shopping. Okay, we only have this much money to spend. I want you to help me look at these prices. Which one do you think is better to choose? Is it, the name brand item or the off brand item? Which one is cheaper? Have those conversations with them. They're going to learn from it. And it helps them to understand maybe why you can't do certain things or why you're able to do certain things. Be okay with saying no. That's, to your family, to friends, to coworkers. If you've structured your budget and you've only allotted so much money for dining out and you've met that, you may have to tell a coworker, no, I'm sorry, I can't go to lunch with you today. And you're just going to have to learn to become okay with saying that. You don't have to give them all the nitty gritty details, but I don't think there's anything wrong with saying, and I actually respect it when people say it to me. You know what, I really haven't budgeted for that this pay period, but let's get together next pay period. I'll make sure I set aside, some extra money for us to go enjoy lunch together. There's nothing wrong with saying that. And I think we really need to normalize that. Be okay with saying no. Now here's kind of the detail of making it stick. This one's really important. You have to track your spending, right? If you set the goal on that monthly spreadsheet, but you're not actually tracking it, how do you know if you're sticking to the goal that you set for yourself, right? So you've got to track it. You can use an app, you can use a spreadsheet, whatever. You use a piece of paper and write it down, but you have to track your spending. That's what's going to help you keep yourself on target. And that brings me to this, and I apologize. I know it's kind of small and maybe a little hard to read, but this is the spreadsheet that I actually use with members. And you may look at this and think, oh my gosh, that looks complicated. I promise you it's not. Okay. But we have essentially the estimated column. This is what we're estimating, or what I like to actually call goals. These are your spending goals for the month in each of the categories. So we've got, savings, your mortgage or rent payment, all of your utilities and entertainment, dining out, all of that stuff. And then of course, credit cards and loan payments. You're entering your income down here. And if you can see at the bottom, leftover should be a 0, because that means you're allocating, every dollar has a purpose. As I mentioned earlier, that number should be a 0. But here's the key to tracking. Every week, we're breaking it down into what you have actually spent that week. And it's going to total it up for you over here. And it's going to tell you the difference from your goal, what you have said you want to spend on that category, what you've actually spent, and if there's any money left over from that. So if said that you're going to spend $400 a month on groceries, but maybe you only spent $350, it's going to show you have an extra $50 here left over that you can apply somewhere else, right? So it makes it super easy for you to see where the money's going and how can you maybe change things. Now, on the opposite end of that, if you see that, you allotted yourself 400, but you've actually spent 500, you've gone over $100, you may have to go back and take a look at your spending plan and say, okay, I've spent an extra $100. Where am I going to take that from? How am I going to adjust? And if you find that you're doing that every month in a certain category, you're going over, then you need to adjust this estimated or goal column in months going forward. So you kind of plan for that ahead. Now, this isn't just a tracking necessarily what I've spent. You can also use this to plan ahead. So you're going to say, you know what, I know that I'm going to be spending this much, or this is my goal. So I'm actually going to plan and say, okay, I've got 100 this week and 100 this week and 100 this week and 100 this week. And you're really kind of plotting it out ahead of time. That's going to help you keep on track, make sure you're staying within the goals that you've set for yourself, and help you meet the financial goals that you have. I'm sure there's going to be lots of questions on this. Keep in mind that if you request it on the survey, we will send you a copy of the spending plan. So please make sure that you mark that. Also, if you decide to have an appointment with any of our counselors, we can also go over the spreadsheet in detail with you and help you create that. Now, some people are just not Excel spreadsheet kind of folks, right? And that's okay. Not everybody is into that. And some people prefer to just have the access on their phones. We do have an app in your credit union, the mobile banking, where you can actually track your expenses. You can even import from your credit cards and other accounts so that it can keep it all, on track in one location. The first time you set that up, it does take a little bit of time because you've got to import those different accounts. But once you have it set up, you can actually tag things to say, you know what, I want to track everything that is clothing or everything that's education. I want to track how many fees I'm paying. You get to go in and customize the items that you want to track, and it's going to, give you kind of a summary of that. You can also set up notifications so that if you're getting close to a certain goal, you'll get a notification that will let you know, hey, you almost met this spending limit. Kind of beware, that kind of thing. So there's multiple other apps available in your app store that you can check out. The important thing is that you find something that works for you. One of them that I often recommend, it's pretty good, is also Mint. Some people love it, some people don't. I think it's a fairly easy, user-friendly one. But I do also like the credit union one because it's in your online banking already. So you don't have to have a separate app for that. All right, our third and final poll question, Jack.
Absolutely. So we covered a lot of topics here about where to start, how to create a spending plan, reasons behind a spending plan, as well as how to make it stick. So we just want to get a pulse of the room, how you feel about creating a spending plan now. Maybe you were one of the ones that already have one and you're going to continue using it. That's A. Or B, oh my gosh, I can't wait to get started. Jamie just inspired me so much. Maybe you're not as gung-ho right now and you need a little extra help creating one. Or D, maybe you sat here and you said, I'm not convinced it'll help me, need a little bit more information. Where do you stand right now? What do you think, Jamie? What are we going to see from the attendees today?
Well, I'm hoping that I haven't not convinced anybody. So hopefully I have created some excitement and people want to get started and or continue what they're using. So that's always the goal, right?
Got about 5-10 more seconds, so make sure you submit your answers as soon as possible. And it looks like we had a number of people that didn't quite want to respond, and that's okay. You're just here to soak it all up. Only one person, or 3%, said, I'm going to continue using the one they have. Maybe they're going to readjust. More than a quarter said, can't wait to get started. A few more people said, need help creating one. And to your point, Jamie, nobody was convinced that it won't help them. So that's a good thing. If you guys were too shy to respond or anything like that, we're going to throw up some information here shortly on resources that can help you out. Jamie, I'm going to stay here, but finish us out.
All right, thank you. And again, thanks for those responses. For those who can't wait to get started, I cannot wait to help you get started. So I'm going to show you or talk to you about how the credit union can help you in getting that, how you can set up an appointment with a counselor if you so desire. And for those who, definitely for those who need the help and for those who are going to continue to use what you have, please feel free to reach out anytime if you need some additional assistance. So first, just some tools and resources for you. We have, of course, our department. We've got 5, I'm just going blank here. We have 5 counselors on staff that are ready and willing to help you with any of your financial goals, whether that be structuring your spending plan or paying off debt, maybe improving your credit. We're here to help. You can get more information on our department at financialwellness.aacreditunion.org. And we have a wonderful financial wellness tool called the Navigator. You can find that at navigator.aacreditunion.org. It is free and you can log in and you have access to just a wealth of financial knowledge, everything from budgeting. They actually do also have a budgeting, I don't know if it's really an app, but a feature in the Navigator where you can set up a budget in there as well. But on top of that, there's articles and videos and all kinds of things on, investing, preparing for your kids' education and all kinds of things. So a great free resource for you to use. And finally, savvymoney.com/AACU is our credit monitoring tool that is also free. If you have online banking, it's already built in there. You just sign in for the first time. You'll have access to your TransUnion credit score and report for free, which I always recommend that people monitor, that it's going to alert you to any ID theft issues or just ways that you can maybe improve your credit score if that is an issue. Great resource. And as I mentioned, our financial wellness department, we do have 5 certified credit union financial counselors on staff ready and excited to help you. We are experts in financial assistance for bruised credit situations, advanced financial indebtedness solutions assistance, which is really just a fancy way of saying debt payoff plans. We want to help you get out of debt and stay out of debt. Continuous accountability, support, and guidance. We want to be your cheerleaders, your coaches, and really help you meet the financial goals that you have for yourself. And finally, of course, just like today, the educational seminars and webinars throughout the year. Yesterday, we actually had our Teens and Money financial workshop, which was really exciting. We had a bunch of teens come join us for the day. So we get to do lots of different events throughout the year, again, to help you with education and meeting those financial goals. You can find our number and our email address there. Feel free to reach out anytime. Our appointments are by appointment only, and we really want to give you that one-on-one personalized counseling service. Jack, I'm going to throw it back over to you so you can quickly go over some of the promotions and things coming up.
Awesome. Thank you, Jamie. So for the most part, we've covered a bulk of the spending plan material, but I highly encourage you to stay tuned. Got some great public service announcements. And then we want to get to all of your questions that have been submitted over the last half of the presentation. But before we jump into any of the questions, just want to highlight the fact that, like today, the theme of this quarter is financial first. So what we've done is positioned a number of our different products and services as if you were taking them on for the first time. So if you're looking for more information about your first savings or checking account, your first credit card, your first auto loan, or maybe your first home purchase, be sure to check out the URL we have right here, aacreditunion.org/financial first for offers, tips, details on how to get started. You can also scan this QR code. Going back to some of the questions we've received, you can request a copy of today's presentation through the survey, which will go out at 12:30 p.m. Central Standard Time. So again, if you want a copy of today's Excel spreadsheet that Jamie went over earlier, or the presentation at large to refer back to, make sure you respond to that survey that's going out here in about 10 minutes. Moving on here. Want to make sure that you all know that most all of our financial solutions do require you to be a member owner. So if you're not a member, or if you're interested in sharing some of the things you learned today or any of our products and services with a family member, make sure that that person or you yourself open up a share savings account. That'll give you the opportunity to learn about the benefits of being a credit union member. And not only that, but if you use promo code BD4412, which is indicated on the slide here in front of you, will credit you or your loved one's initial new member deposit of $6. So you literally have nothing to lose. Now, for those of you that are already members, which I know there's a number of you on today's call who already are, we'd like to take the time to point out some exciting offers currently available through the end of September. The first one is our auto loans, whether it's a purchase or a refinance. We do have rates as low as 2.1% APR. Plus, you can defer your first payment for up to 90 days. So maybe that'll give you the opportunity to build a spending plan, factor in your new auto loan rate, and really take control of your financial future. Another really awesome promotion we have through the end of September is our credit card, specifically our low rate credit card. Right now, our rates absolutely annihilate any competitors out there. It does depend on your credit worthiness and your debt to income. However, anyone that opens up a new low rate credit card, you can qualify for a 0% APR introductory rate on balance transfers. And that's good for your next 6 billing cycles once that credit card is opened. So if you're looking to maybe reduce your debt or really get a pulse of your spending habits, highly encourage you to consider our credit card. And then real quick, our checking account, if you or a youth person in your household open up a checking account, you'll earn $25 when you open that up and spend $25 within 60 days. So to learn about these offers, as well as more that I didn't mention for sake of time, check out aacreditunion.org/offers. We are not commission-based or anything like that. So I get really excited whenever we have great products and services that can help out our members. Moving on, last little promotion plug here. A lot of you have family members that could benefit from a relationship with the credit union. So if you're already a member, keep that in mind, and there's something in it for you too. For every family member or coworker who's in the air transportation industry, you have the opportunity to earn $25 per referral, up to $250 a year when you refer them and they join. Again, that QR code that you see on the screen there has more information about how to take advantage of that offer and how to help your loved ones to experience the benefits of a credit union membership. So at this point, Jamie, we do have a few questions that I want to volley up to you, but for the sake of putting the information on how to get a hold of y'all back up, I believe it was right here. Yep. So I'm going to leave that up as we answer some of these questions. Again, y'all, if you loved what Jamie shared, if you want to go more in depth, we've got the phone number right here, or shoot them a quick email and they can pick up from there, set up an appointment or a quick conversation about how to help you out throughout the year. So Jamie, you ready for a few questions?
I'm ready.
All right. So this is one I already answered. So hopefully I was right, but I want to fact check here. A lot of people, whenever they're building a spending plan, may not have a set monthly income or set income. Maybe they work in the service industry. Maybe they have commission-based, sales. What are your thoughts on developing a spending plan when that monthly income may fluctuate, based on hours, overtime, et cetera?
That's a great question. And I mean, to be honest, those are a little bit trickier to put together, right? I mean, when we don't know exactly what's coming in every month, how do we determine, what we can spend on different things? So in those instances, we really have to depend on averages. And your fixed bills aren't going to change every month, regardless, whatever your income is. Your rent or your mortgage is going to be the same. Your utilities are going to be mostly the same. There's some fluctuations with electricity and stuff like that, but we know the things that we have to spend every month. And your minimum income, in the ebbs and flows of whether it be commission work or whatever, should at least meet those requirements, right? The minimum payments of everything that has to go out. If it's not, then you might have to rethink some things in terms of income, taking on a second job, or maybe getting out of that industry. But mainly we want to look at averages and say, okay, on average, I'm spending this amount on whatever it is. You're going to allot for that. Now, the months that you do really well and you have the larger paychecks, all of those things are going to be covered pretty easily. And the months where you maybe don't have the commissions or whatever it is, it may be a little bit harder to cover those. So what I always tell people is on those really good months where you have the extra income, you're going to have to set some aside in savings for those months that maybe you don't have that income coming in. And that's going to help kind of build that cushion to protect on those maybe lower end months.
Excellent.
Other than that, it is kind of tricky, to do those, but that's the best way that I have found to work with people is you've got to be able to set aside money on the high months to cover those low months.
Excellent. So I think you made a hybrid out of kind of what I suggested, which was, there's two lines of thought. One is plan for the worst, hope for the best, right? So make sure, like you said, you cover those fixed expenses, things like that, and assume that every month is going to be your worst month as far as your monthly income goes. I think the important thing is, and you kind of touched on this, Jamie, throughout your presentation just now, if you do have an excess, it's equally as important that you assign a purpose to any of those quote unquote good months. Otherwise, like Jamie shared earlier, you're not going to know where it went. I know when I was younger, my mom, she had what we called the family fund. And so anytime we had some extra income, maybe we had a garage sale, maybe she picked up some extra hours as a preschool teacher, that sort of thing, that money went into a fund. Now, just because you assign a purpose to something doesn't mean that it can't be fun, right? So, treat yourself. And what was really cool, bringing it back to something you shared with us earlier, Jamie, is we involved the whole family. So we got, maybe $5 or $10 for taking care of the chickens and the horses and things like that out back in allowance. We worked pretty hard as kids, and my parents saw it fit to give us an allowance. If we knew we wanted to go to the water park, we would take that allowance and supplement the family fund with our allowance. So again, giving that purpose to any of those windfalls or extra hours, I think is really important. But bottom line, going back to the question at hand, Jamie, not to take over, is, make sure that those base expenses are taken care of. And then on those good months or anything else that you can forecast and set that side of money aside, help you take care of it.
Exactly.
Awesome. Real quick, just want to, like I said before, anybody that wants a copy of this presentation or that budget worksheet, I want to encourage you to indicate that on the survey. Amy or Jamie, will you talk about the app going back to, some of the budget credit union app that I have up here? Where can they find that again?
Yeah, that's going to be in your online banking, or if you have the credit union app on your phone, you can go into the menu, financial wellness, and then it's going to be in there in the budget. I think it's called my finances. I can't think of it right at the moment, but it's there in that little sub menu under financial wellness.
Great. I think that just about does it for some of the questions. I think you've pretty much addressed everything. So I want to encourage y'all, if you had more questions or want to get into more detail, please reach out to Jamie and her team. They do a phenomenal job of working with our members to get them, wherever they're at in life's journey. You could have an 800 plus credit score, 500 plus credit score. There's something for everyone in working with her department. Case in point, creating a spending plan that applies to everyone, no matter where they're at in their financial journey. And they do a great job at that. So I want to thank you all again for tuning in. Remember, if we didn't get to your question or if it's more personal in nature, indicate that on the survey and we'll definitely reach out to you early next week. Also, be sure to check out our event schedule at aacreditunion.org/events. In fact, next week, and a lot of you may have already received an email about this, we will be hosting Aviation Celebration Week in all of our branches coast to coast, which will feature special promotions, 3 $1,000 drawings, plus treats and giveaways in those branches as well. For those of you that have branches, access to branches with Saturday hours, we'll be doing some special events at those branches, especially in the DFW area. And then also on that events page, you can learn about our upcoming webinars. Everything for August is posted, and our September webinar topics should be posted very soon. As you see here on this final slide, be sure to follow us on Facebook, Instagram, Twitter, and YouTube for financial tips about what's going on in the economy, as well as upcoming events and webinars. Please note that we recently added a YouTube channel where you can watch previously recorded webinars and more. That's where a copy of today's recording will be posted sometime next week. So finally, last but not least, on behalf of Jamie, myself, and the entire credit union, we hope you have a great rest of your day. Please stay safe, healthy, and happy out there. Jamie, I'll let you bring it home. Anything else you want to add?
Again, thank you all for attending. If you happen to win one of those $1,000 prizes, make sure you add that into your income portion of your budget, your spending plan. Y'all have a great day. Thanks for joining us.
Great tip, Jamie. Thanks, y'all.